Nightly Business Report, produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. By Kidder Peabody, one of the world's major investment firms, and GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations. A.G. Edwards, investments since 1887. And by contributors to public television.
Good evening. President Bush today lost a key battle in Congress on his savings and loan bailout package as a House banking subcommittee voted to adopt more flexible capital requirements for S&Ls than the president proposed. The original Bush bill calls for thrifts to raise their capital to 6% of assets from the current 3% within 2 years. But while Treasury Secretary Brady said that he would recommend that the president veto the entire bailout package if that standard were relaxed, the committee did just that, prompting some to say that Congress was caving in to pressure from the thrift industry.
I just think it's a lousy circumstance. Goodwill is not real capital. Deferred loan losses are part of the whole. They're not capital. To count them as capital puts the taxpayer at much greater risk. And so what you really have here is the taxpayer versus the institution. And as a representative of taxpayers, I think we have to stand up for tougher standards.
Congressman Frank Annunzio says, who sponsored the change in the proposed capital requirements, said the original requirements amounted to a death sentence for the 1,100 thrift institutions. Linda?
Well, setting up another expected confrontation with the president, the Senate today passed a bill that would raise the minimum wage more than the president wants. The vote was 61 to 39, but as Washington correspondent Dennis Moore reports, that isn't enough of a margin to override a presidential veto.
4 million workers at the bottom of the wage scale have become the pawns in a high-stakes chess match between President Bush and Democrats in Congress. At stake, who dominates domestic policy? The Democrats have just called the president's bluff on the minimum wage.
We did something unusual. We fired our best shot and last shot and only shot first.
The president proposed to raise the minimum from $3.35 an hour to $4.25 by 1992, with a training wage, 80% of the minimum, paid to new hires for the first 6 months. The Democrats' bill passed this afternoon raises the minimum to $4.55 by 1991 and limits the training wage to 60 days, a bill the president has threatened to veto.
I have no intention of budging 1 inch on this, and I got too much at stake.
Democrats say the increase is just simple economic justice for workers who haven't had the minimum raised since 1981.
All we're asking out here, are we going to best provide the cost of living return for those individuals since 1981 who have lost some 40% of their purchasing power?
In the restaurant business, as in others dependent on low-wage employees, some say even the Bush plan is a serious threat to profitability.
We're going to eliminate dishwasher jobs. We just don't fill them. We try to make them more efficient, try to increase the prices.
And in planning a new restaurant, Corotolo raised his spending on equipment 10% to eliminate at least 2 busboy and dishwasher jobs because of the minimum wage threat.
The business community is going to look at the Bush administration to see if they really mean business when they say veto. I think the American people are going to be looking at the Bush administration to see if he is really going to be the leader.
Even if, to America's low-wage workers, the president appears to be leading in the wrong direction. 36 senators have promised the president they'll back up his veto, enough to stop an override. That could leave the Democrats with a choice: give in or go for another year, the 10th in a row, without an increase in the minimum wage. In Washington, Dennis Moore for the Nightly Business Report.
Stock prices opened the day on a narrowly mixed note, with the blue chips experiencing light selling pressure as the Dow Jones Industrial Average fell about 2 points at the outset on top of yesterday's closing loss of nearly 3 points. But pockets of buying support in the broader market helped advancing issues take a slim 6-5 lead over losers, and that was influential in lifting the Dow to almost a 3.5-point gain by 11 a.m. This resilient performance, along with a firming bond market, triggered a little flurry of index-related buying during late morning. And at noon time, the industrial average jumped to a 13.75-point gain, while advancing stocks moved out to an 8-5 lead over losers. Because trading activity was a bit disappointing on the rally, the market lost some of its luster in mid-afternoon, with bullish enthusiasm also blunted by a sharp rise in oil futures and growing concern over what this Friday's reports on March producer prices and the February trade deficit will show. At 3 p.m., however, the industrial average was still holding a gain of nearly 9 points, with 8 stocks higher for every 5 lower. Now, that firm behavior, along with a good deal of takeover speculation, helped the market edge a bit higher in the final hour, as the Dow Jones Industrial Average posted a closing gain of 9.71, putting it at 2,311.58. Theoretical high of the day, just above 23.21, the low down around 22.95, about a 26-point range. Trading volume moved up sharply from yesterday's soporific pace to nearly 147 million shares, and a lot more up volume than down volume, better than twice as much. The Dow Transport Index did well, up 6.15, utilities rising 0.65, the Dow 65 up just over 4 points, and the closing tick just a modestly bullish plus 79. Standard & Poor's 500 gained 1.38, a little over a 1 3/4 point rise in the 400. The 100 up nearly a 1.25, but the Commodity Research Bureau May Index down 0.80. The New York Stock Exchange Index rose 0.69, Value Line up 1.16, and the Wilshire 5000 rose just over 13.5 points. Occasional periods of strength in the U.S. dollar bolstered bond prices nicely in early trading, and that prompted some short covering purchases, which added to the upturn. But volume was relatively light, and many traders backed off in the face of tomorrow's offering of $7 billion in 7-year Treasury notes, not to mention growing apprehension of a slew of data on the economy due out this Friday, including the March Producer Price Index and February trade deficit. Backing down from their best levels of the session, bonds in all sectors closed with gains of only 8 1/4, like these 30-year Treasuries up 4/32 of a point. Shearson Lehman Long Treasury Bond Index gained 1.79, and Fed funds edged down just a bit to close at 9 3/4%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, platinum climbed in reaction to renewed firmness in palladium. Gold slid while silver edged upward. Despite Federal Reserve intervention, the dollar ended mostly higher. The pound fell nearly 3/4 cent against the greenback on the threat of a strike by British dock workers. And oil prices inched up 4 cents a barrel in New York as dealers moved into the gasoline futures and cash market. Prices also rose in London.
As the midnight deadline approaches, talks are going down to the wire in New York on Peter Uberoff's bid to buy Eastern Airlines. Although Uberoff says he has reached an accord with Eastern's unions for 5 years of wage and work rule concessions, the main obstacle now is said to be concerns raised by Eastern's creditors about that deal. We'll be standing by for any late developments, but at the heart of the Uberoff buyout attempt is a device known as an ESOP, which, as correspondent Scott Gervey reports, is growing in popularity.
The Peter Uberoff proposal to purchase Eastern Airlines calls for an employee stock ownership plan, or ESOP. Workers would own 30% of the shares of the new Eastern, with an equal number going to the Uberoff management group and the rest going to investors led by Drexel Burnham. The Uberoff plan to make employees into stakeholders requires them to accept $210 million worth of concessions. But many other companies have adopted ESOPs as a takeover defense. Lockheed, Tribune, and Polaroid are examples. And NWA, currently under the threat of takeover, is reportedly exploring such a plan.
If you're registered in Delaware, you have to get 85% of the stock to be effective takeover. And if you can have somewhere under that 10% that is held by employees who don't want to take over, you've locked up a big percentage of the 15% that'll not vote in favor.
Investor Marvin Davis is charging that any action by NWA to create an employee stock ownership plan would hurt shareholders. It would also interfere with his unfriendly takeover attempt. An ESOP helped Polaroid fend off a takeover attack from Shamrock in a bitter battle.
I would assume stock ownership by employees is going to be a thing that's going to grow around the company, not just for takeover reasons, but for improved productivity.
But many ESOPs have been in place for years and are considered an important employee benefit.
So employees become stakeholders above and beyond their normal participation as employees and have a viewpoint of the results and success of the company as helping them. It has an attitudinal change and for the benefit of other stakeholders.
Drexel, which is working the sale of Eastern for Texas Air, has worked many employee buyouts. and even held a seminar on the subject at its recent junk bond conference in California.
It does require the investors and the lenders to really put on their thinking caps because there is new terminology, there are new rules, and there is a whole new concept, which is that instead of putting up cash dollars of equity, that the employees can put up future cash dollars by taking a pay reduction or by increased productivity.
Experts say Eastern will need more than employee stock ownership to guarantee labor peace. It will need to include workers in decisions from the flight line to the boardroom. In New York, Scott Gervais for the Nightly Business Report.
A federal prosecutor today said the government is free to seek the indictment of Drexel Burnham Lambert for securities fraud. Drexel agreed in December to plead guilty to 6 felony counts and to pay $650 million to avoid an indictment. But the firm has failed to meet one condition of that agreement, the reaching of a separate deal with the Securities and Exchange Commission. The deadline for that deal passed yesterday, and spokesmen for the SEC and the U.S. Attorney's Office declined to say whether Drexel's plea bargain would now be nullified.
Japanese Prime Minister Noboru Takeshita today faced 3 hours of questioning in that nation's parliament concerning his ties to the Recruit insider trading scandal. But as Mel Adams reports, despite new admissions, the Prime Minister continued to reject demands that he step down.
There he was at the beginning of the year, standing tall despite his 5 feet 5 inches. Takeshita had accomplished something his predecessors could not. He was successful in introducing a highly unpopular tax reform, Japan's first in 40 years. Then, with the prospect of world leaders converging on Tokyo to attend the funeral of Emperor Hirohito, Takeshita continued to bask in the political limelight, looking like a shoo-in for a second mandate this fall to head the LDP through 1992. But now all that has changed. Today, Takeshita stood before Parliament to account for revelations this past week that he and his associates had received nearly $750,000 from the company at the center of the burgeoning pay-for-politics scandal. As the allegations piled up, opposition calls for Takeshita and his cabinet to resign continued to mount. Today, he continued to refuse. The affair centers on contributions or discount stock deals given to politicians, bureaucrats, and businessmen by the Recruit Company, a young telecommunications and employment firm. The scandal has spread to encompass almost every leader of the ruling Liberal Democratic Party. It was widely assumed that Takeshita, known for his political agility, would survive. But now it appears he is grappling for his political life. Carl Van Wolfren is author of the recently published The Enigma of Japanese Power, and an authority on Japanese politics. He says there is more to the scandal than meets the eye.
The real scandal is that the zeal of the public prosecutor and the indignation of the Japanese press leaves the impression that this kind of thing is not tolerated in Japan. This is deceit. Not only is this tolerated, the transactions that the scandal is about are not only tolerated, without these transactions there wouldn't be an LDP, and the Japanese political system, as we know it, would have collapsed long ago.
Political analysts here say that the Recruit scandal may have fatally crippled Takeshita, while at the same time putting increasing heat on his powerful predecessor, former Prime Minister Yasuhiro Nakasone. Nakasone was Prime Minister at the time the Recruit Company allegedly bribed the chairman of the giant Nippon Telegraph and Telephone Corporation. And so as the scandal continues to unravel, an increasing number of Japanese parliament members feel it has already reached the critical stage, and that the ruling Liberal Democratic Party is no longer capable of cleaning up its own house. In Tokyo, Mal Adams for the Nightly Business Report.
Wall Street managed to recruit enough buyers to get the Dow Jones Industrial Average well into the plus column with a closing gain of 9.71. 870 issues up on the day, only 501 down, 80 new highs for the year, 20. From many analysts, it'd be a long time for this company could sell out. Public Service Company of Colorado was up 1/8 of a point. Ramada Incorporated, no change, although the Pritzker family of Chicago has reduced its stake in the company from 7.2% to 4.8%. Sears Roebuck gained 5/8. Crown Cork and Seal up 2 3/4 points. The Payne Weber brokerage repeated a strong buy recommendation, sees a possible $65 a share takeout on a buyout. And also, it's interesting to note that on 1.2 million shares, Crown Cork today traded more actively than it ever has in its 90-year history of being a public company. IBM did well today, up 1 1/8, and Greyhound matched that gain. Alcoa rose 1.5 points. The firm and Sells brokerage increased 89 earnings estimates there. American Airlines up 1 point in a firm airline group. American Telephone a 3/8 point gainer. Houghton Mifflin, the publishing company, up 2 1/4. Some speculation that Gulf and Western may have its eye on it. And then ITT, which received favorable comment in this week's Barron's Financial Magazine, up 3/4. McGraw-Hill giving up a little what it gained yesterday when it became a speculation that Gulf and Western might make a takeover bid. Sunstrand moved up 3/4 of a point. The company is going to sell its Transcom Systems division to Sony. Gordon Jewelry, which jumped 5.5 points yesterday when the company said it's studying options, including the possible sale of the firm, a recapitalization, or a big stock buyback, up another 2 1/8 points today. Anadarko Petroleum rose 1 3/4. First Boston Corp came out with a strong buy recommendation. Community Psychiatric Centers up 1 3/8. Company had no news, but Merrill Lynch had a strong buyout recommendation late yesterday. Holiday Corp rising 2 points. The company tied the rise in the stock to a recommendation by Montgomery Securities. Tucson Electric Power fell 1 3/4 points after a 1 1/8 point loss yesterday. There is concern the company may have to cut its dividend if it doesn't get a rate increase. A hearing for that is set next Monday. Citizens and Southern down 1 point. Now, the company has asked NCNB Corporation to withdraw its stock swap buyout bid, and NCNB said it will not. However, analysts say regulators up in North Carolina could delay any takeover there for anywhere from a year to a year and a half. Over in the American Exchange, a gain of 1.74 in the market value index. Trading volume down some 700,000 shares from yesterday's pace. 90 more issues closed higher than lower. Topping the active list, Fruit of the Loom on 860,000 shares. Stock up 1/2. Energy Services gained 1/8. Chieftain International a 1/4 point rise. Magma Copper was up 3/8, and then fifth in volume, Texas Air down 1/2 point. Penn Traffic Company up 1 3/4. 6.8 million shares have been tendered by Big Bear shareholders on Penn Traffic's attempt to take over that other supermarket chain. Looks like they're going to be successful in gaining control. And then HAL Incorporated, the parent company of Hawaiian Airlines, tumbling 8 1/4 points on news that Pacific Corp has withdrawn its $45 a share cash buyout bid, but Pacific Corp still wants to retain the first right of refusal on any other offers that HAL gets. NASDAQ trading a gain of 2.40 in the index there, and volume up nicely, well above yesterday's pace to 133 1/3 million shares. About 11 stocks up for every 9 down. The 100 index gained just over 3 1/4 points. Topping the active list, Intel up 1 1/8. Merrill Lynch came out with a buy recommendation, increased 89 earnings estimates, and Shearson Lehman analysts had positive comments too. Apple Computer a 3/4 point gainer. MCI fell 1/8. Lynn Broadcasting up 2 points. Student Loan Marketing off 1/8. Telecommunications A edged up 1/8. Sun Microsystems 5/8 point gain. Oracle Systems up 1 1/8. The Price Company gained 1 1/4. And Old Kent Financial down 1 1/8. Officials at Old Kent said that yesterday's rumors that Bank One had its eye on it were actually unfounded. KMS Industries rising 1 1/8 points. The company forecasting higher first-quarter earnings than last year. SciMed Life Systems a 2-point gain there. The company had a fourth-quarter profit of $1.8 million versus a loss of $317,000 the year before. And Calgon Carbon blamed that 1 7/8 point loss on a downgrading by Merrill Lynch. Finally, in the spotlight, Storage Technologies down 1/8, although the company today announced it plans a split. However, it's a 1-for-10 reverse split. And then Quantum Corp up 1 1/2 on news that it has declared a 3-for-2 split. And that's our Wall Street wrap-up. Linda?
Thanks, Paul. Well, with the latest round of GATT trade talks in Geneva now over, U.S. Trade Representative Carla Hills today declared those talks a success. Testifying before a House Trade Subcommittee, Hills said the results of the talks will help to break down barriers to trade in agriculture, services, and other areas. But she cautioned that the tough part of the bargaining still lies ahead.
We are now well positioned to undertake in earnest the final hard bargaining, which will determine whether the Uruguay round succeeds. As a result of last week, I'm encouraged that others beside the United States are serious about this process, and I am optimistic about the chances for success. We now need to quicken the pace of our work in Geneva if we are to keep to the 1990 deadline.
Incidentally, the Uruguay round of trade negotiations began in 1986 and is scheduled to wrap up next year.
Coming up, tonight's Money File segment looks at changes in tax deductions for individual retirement accounts.
From the offices of Piper Jaffray and Hopwood, I'm Tony Gill with the Minnesota Business Report. The proposed takeover of Northwest Airlines by oilman Marvin Davis is now a battle, and the court is the battlefield. Today, NWA Inc., the airline's parent company, has filed a labor lawsuit against Marvin Davis for allegedly interfering with ongoing labor negotiations. Davis has been holding meetings with airline employees while trying to take over Northwest Air. Davis himself has filed a lawsuit asking for a temporary restraining order to clear the way for a proxy battle by getting the court to stop the airline from awarding shareholders' rights. Analysts say Davis appears to have thrown the gauntlet. His suit today is apparently the first sign that his takeover proposal is actually a hostile takeover. NEC's ultra-fast supercomputers are ready for the U.S., but analysts say Cray Research of Minneapolis doesn't have much to worry about. NEC recently lost to Cray in a mega sale to Massachusetts Institute of Technology. Analysts say Cray has a large base of loyal companies. As of today, Cray is responsible for developing 2/3 of the world's 400 supercomputer installations. Locally, Honeywell benefits from NEC's enterprise and will market NEC's HNSX supercomputers as part of a joint venture. Honeywell has finally replaced former Chief Financial Officer Louis Navin with Christopher Steffen, who is controller at the Chrysler Corporation. From the offices of Piper Jaffray and Hopwood, I'm Tony Gill for the Nightly Business Report. Now back to the National Desk.
A new industry report says rising interest rates and a glut in commercial space will lead to a 3% decline in construction contracting this year. Dodge Suite's Construction Outlook says the building of single-family homes will also be hurt, ending 4 years of strength in that sector. McGraw-Hill economist George Christie also sees weakness in public works construction as a result of federal budget limitations.
In tonight's Money File segment, Money Magazine staff writer Eric Schoenberg answers the question, can a contribution to an individual retirement account still be used to lower a 1988 tax bill?
Remember the IRA? The individual retirement account, the tax shelter for the little guy, was one of the best financial deals ever to come out of Washington. But tax reform put an end to it, sort of. The IRA may not be what it was, but it's not gone. And as you look for ways to lower your 1988 tax bill, it's worth seeing whether there's anything left in the old IRA for you. Actually, any wage earner can still contribute up to $2,000 to an IRA, plus $250 for a non-working spouse. And that money will still grow tax-deferred, which means that your interest will build up faster than if it were taxed normally. The difference, since tax reform, is that you might not be allowed anymore to deduct that contribution on your tax return. Here are the rules. You can still write off every dollar you put in if you and your spouse are not covered by a retirement plan at work, or you are covered, but you have an adjusted gross income less than $40,000 if you're married filing jointly, or under $25,000 if you're single. You can write off part of your contribution if you're covered by a retirement plan and you're married and making between $40,000 and $50,000, or you're single and bringing in between $25,000 and $35,000. If you're covered by a plan at work and you make more than $50,000 married or $35,000 single, you can't write off any of it. Now for the bottom line. Should you feed your IRA or not? Well, if you qualify for the full deduction, you definitely should, before April 17. For you, the IRA is still one of the best investments you can make. But if you qualify only for partial deductions or none at all, you should probably forget about the IRA. There's a good chance that tax rates will go up in the future, which would wipe out the benefits of tax-deferred growth. Plus, under tax reform, non-deductible IRA contributions are simply a bookkeeping nightmare. For now, your best bet is probably to save for retirement through your company retirement plan and hope that eventually Congress comes to its senses and brings back the fully deductible IRA for everyone. I'm Eric Schoenberg.
Recapping tonight's top stories, Congress sets the stage for confrontation with President Bush in two areas, savings and loan and minimum wage legislation.
The bulls pave the way to higher stock prices as the Dow Jones Industrial Average climbs nearly 9 3/4 points to close at 2,311.58.
And looking ahead to tomorrow, Tom Peters will look at the problems in establishing a level playing field in trading with Japan. But right now, Paul has the last word.
Speaking of trade, most of the efforts in Congress these days seems to be focused on keeping certain foreign goods from being imported into this country. But in a slight departure, Senator Bob Packwood and 4 other Western senators have filed bills to keep American logs from being shipped out of the country. Packwood says timber mills in his state are closing because of a shortage of logs, and restricting log exports would help that situation. That's truly a knotty problem indeed, but right now it's time to lumber out of here while we're on a roll.
I hope they get to the root of that problem.
That's it for this edition of the Nightly Business Report for Tuesday, April 11th.
Now for Linda, Paul, and all of us on the Nightly Business Report, I'm Jim Wicks. Good night.
The Nightly Business Report is made possible by A.G. Edwards, providing financial services through more than 340 locations. A.G. Edwards, a century-old tradition of putting the customer first. By Kidder Peabody, one of the world's major investment firms. And GE Capital, providing business with comprehensive financing. 2 companies of GE Financial Services. By Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. And by contributors to public television. Reuters, the world's largest electronic publisher, provides the Nightly Business Report with news, market data, and communication services worldwide. For a transcript of this program, please send $4 check or money order to NBR Transcripts, WPBT, P.O. Box 2, Miami, Florida 33261-0002. Please include the date of the broadcast.
Major funding for the Nightly Business Report is provided by Piper Jaffray and Hopwood Incorporated, where understanding you comes first. Additional funding is provided by 3M and its subsidiary, Eastern Heights State Bank. It pays to check with the Heights first. Custom Business Forms, a local manufacturer of snap-apart and continuous business forms. Price Waterhouse, independent public accountants. Expect more from us. And Minneapolis St. Paul Magazine, enlightening, lively, colorful.
AIDS. Private Stories. Public Challenge. All this month on Channel 2.
Tonight's broadcast schedule is brought to you in part by the Medtronic Foundation, committed to innovation and education and to maintaining the health of older people. TKDA, Tolles, King, Duvall, Anderson and Associates Incorporated, engineers, architects, and planners. Rotland Homes and Rotland Townhomes, innovators in design and lasting value, a builder for life in the Twin Cities. The foundation of the Dorsey and Whitney Law Firm, with offices in Minneapolis and Rochester, Minnesota, New York, Washington, D.C., Montana, London, Paris, and Hong Kong. And by the members of Channel 2.
You're watching member-supported Twin Cities Public Television. KTCA TV, St. Paul, Minneapolis, Channel 2.
It takes two.